folks, Dan Frio here with your opening bell for April 29th, 2025. So what we're seeing today, here's the highlights that we're going to go over today. We have the stock market, the equity markets, they're all in the green, well, other than the Russell 2000. VIX is down, well, not much, but the blood pressure is coming down a little bit. We also have bond prices up just a tad. That's helping interest rates. And then we're also going to talk about home prices. Yeah, home prices on the Case-Shiller Index just came out, and we're going to talk about those briefly, and then we're going to talk earnings reports because a lot of people are coming out saying earnings are going to get clobbered because of tariffs. How's the earnings season really looking so far this year? So that's what we're going to tackle in today's video. So without further ado, let's get over to it. So my name is Dan Frio. I actually do this report 2 times a day and inform you guys what's going on with these things. Because if you're looking to build, buy, or refinance, you have to understand the mortgage options for you. So our slogan here is one application, one credit pool. We're going to shop your loan to over 30 different lenders. I'll get to that information at the end of this video because right now I want you to understand what's going on with these things right through here. So let's get over to it. Yesterday, mortgage rates eased just a little bit. Is that going to continue? Well, let's get over to the markets that we're seeing right through now, this at this time, and see what the headlines are and what the markets are doing right now. So right now we have the Dow Jones, the S&P, and the NASDAQ all up pretty good right now. The news that we're seeing right through here is basically you're going to see Amazon and tariffs and all that stuff. It's just a smokescreen to just whatever, get us to the next day, I guess. But on the bond market, we're having a nice little reprieve today. We continue this rally with bonds. We're going to take a little bit of a dive into that because if you look at the 5-day chart with bonds, this thing is up and away. And what you have to understand too is as this goes up, rates are coming down. So look how far we've gone all the way up, about 100 basis points there. So that's going to give you a reprieve of about 0.3%, maybe even some loan products up to 0.5% lower in rates. So please follow me on a daily basis so you can keep track of these things. And I'll also show you how to take advantage of these low rates at the end of this video. So the big news what we have right now is some home price analysis just came out, and it says right through here, this is today, April 29th. Home prices growth stalls again in February with January print revised down, S&P Case-Shiller Index says. So if you go down through here, and a lot of people yesterday when the Zillow news came out that prices are starting to go down, I think a lot of those crash people were like, yeah, I'm finally right, but is it really right? Well, let's get over to this thing. Home prices grew 0.5% month over month in February, holding steady from January's increases, which was revised from plus 0.5 according to the Case-Shiller Index of the top 20 cities. On a non-seasonal adjusted basis, home prices accelerated to 0.7, all the way up at the 0.7 from earlier. The Case-Shiller Index of HPI for 20 cities rose 4.5% compared to 4.6% for the consensus and 4.7% for prior. So if you watched yesterday's video, there was an analysis by CNBC, Diane Olick, and she came in and she said, okay, she listed all these cities throughout the whole country of where prices are going, and they had Austin, Texas down 22%. I can't find that data anywhere. So I did a report last night. If you're in Austin or care about that, check out this video right through here. But Austin, Texas, I couldn't find, the furthest down I think I found was maybe minus 7%, and it's still negative, but nowhere close to being minus 22%. So wasn't able to find that data. If you go down through here, let's look at some other big cities. We have New York. It's up 7.7% year over year. Chicago, right where I am, and people were saying, houses are crashing everywhere, folks. Well, not here in Chicago because we're up 7%. Cleveland up 6%. Tampa on the other side, that the poster child of the crashing, is down 1.5%. So this is Case-Shiller. This is a report that we follow each time they post it. And I think this is, most people follow this because it's very reputable. So a lot of the other data that you get out there, I don't know where it's coming from. We try to dissect that. But if you're really trying to focus in on buying a house in your area, please watch me daily, get prepared for the financing piece, and make sure you reach out to a realtor in your area. Yeah, your area that you're looking to buy, and get a good realtor that knows the market and can guide you in the best path you can take. A lot of the crasher people, they're realtors, but I don't know why they come out every day telling you how stupid you are if you buy and how bad prices are going to go. So I'm not sure if I'd reach out to one of them if I'm looking to buy a house. Just thoughts. Okay, so let's get over to this. Now let's look at some earnings reports because we want to look at this to see if tariffs are really crashing all companies in the S&P 500 and basically in the stock exchange. So let's just go over to yesterday's earnings reports because the goal, my focus here is to help you guys understand the economy, the equity markets, the bond markets, and all this ties into these things right through here. So there is a reason why I go through all these. Because what happens is if you start seeing equities doing really, really, really well, you're going to see people moving out of equities or out of bonds and back into equities again. But right now with the tariff scare and everything else, there's uncertainty everywhere. So a lot of people, they do pull their money out of equities and put it into bonds when they're looking for safe havens. But right now we want to focus in on how stocks are doing. So let's just look at some of the earnings reports that came out, let's just say yesterday. And I'll cover these earnings for today, maybe at the closing bell. So yesterday before the bell, we had Domino's Pizza that opened. And what I want to show you is right over my head. It's going to tell you the earnings right through here, revenue, earnings per share right through here. Okay, so this is what you're going to focus in on. So you have, what do we have on the screen? Domino's. Revenue was up 4%, and the earnings per share was up 13%. That doesn't look like a company that's doing really bad right now. We go to Waste Management. They're up, revenue is up 10%. We have earnings per share up 7%, and the list goes on. Let's go to Nucor Steel. It's a steel company. Now, these are going to be pretty much revised here soon because of tariffs. Steel companies right now, revenue minus 10%, earnings per share minus 63. How can it be minus 60? They must have had a write-off or something. You can't have an earnings per share of minus 63%, but I'll check on that. And then let's go to one other one. This was Brown & Brown. Have no idea who they are, and they were up 12% and up 28%. Hopefully you can see those things. So a lot of the earnings reports coming in, they're not as dismal. We had one out of 4 or 5 that we went over that wasn't good. And I'll look into that because it seems like an anomaly that it was down, their revenues were down that far, but I'll take a look at that one. But that's what we're seeing in the markets right now. So if you see these companies through here and their earnings are doing okay, but we have another piece of the equation that came in today was consumer confidence. So if we go over to the economic calendar, here's all the data that came in today. So let's break it down one by one, and then we're going to go back to see market reactions to these things because a lot of this stuff was just posted just minutes ago. So we're going to go down through here. The goods trade imbalance, 161. Let's just skip that right now. The markets they're not going to care about any of these things down through here. We're going to look at the Case-Shiller index, 20 of the houses. Year over year, Case-Shiller went from 4.7 in appreciation. It was expected to drop a little bit to 4.6. It dropped down to 4.7, 4.5. So yeah, home prices are starting to come down, but they're not, you don't see negative 20% in here. So that's one piece of good news right there. When we look at month over month, last reading was up 0.1. This one is up 0.7. 6 times as much as the last reading. So that's how you have to look at it, or 7 times. Consumer confidence fallen off a cliff, which I can attest to that because every day you turn on the news and you're just seeing something that's swaying the market, and it's like every day is a coin flip on how the day is going to end up. So that's what we're seeing there. The big news I was waiting for to get posted this morning was the JOLT index, and it came in really nice. It's 7.1 million. This is job openings and labor transfers. So that's a good report. Last reading was 7.4. Is it supposed to stay at 7.4, and it went down to 7.1. So what this is telling us, basically, I'll just explain all this. Here's what it's doing to the markets, folks, and this is all you really have to know about. Bond market is up, so this is mortgage rates. This is a mortgage bond. So what you have to understand with this bond rate through here is the price goes up, rates come down. So this is a fantastic roll that we're getting right now. So I had 3 contracts come in yesterday, and I told every one of my borrowers, we're going to wait for this to turn because as this goes up, rates are coming down. So if this was a stock that you were like, I'm going to sell it eventually, when you wait for it to just maybe take that turn down and then sell off. So that's what I'm waiting for right now. So if you're a borrower of ours or a client of ours, we're going to hold on the rate locks unless you want us to do otherwise. But it's paying off pretty darn well for us. But if you're a client out there, if you're a homeowner, or you're looking to refinance and you locked in down here, this is you could probably get 3/8 better in rate. I'm just talking about a week ago, folks. So if you're in a contract to buy, maybe reach out to us. I might be able to help save you thousands of dollars on the interest rate and the payments. Or if you're looking to refinance, put a pause on it for a second. Send me your loan estimate and let's review it. So why would you do that? Well, my name is Dan Frio, and I actually do this report twice a day to inform you guys what's going on with mortgages, interest rates, and all kind of other real estate products. So what we're going to focus in on right now is how do you reach out to me and what do I do? Well, I'm actually a loan officer. I work at a federal bank. That makes me federally licensed with all 50 states as well as Puerto Rico. But the unique thing is, and the reason why I'm here is I'm helping this bank grow. And we're up to 34 or 35 lenders. Yep, it was 30 a couple weeks ago. It's 33 last week, and it's 34 or 35 this week. So we're continuing to grow that stable of banks that we can use. Now, here's how it works. By putting in your application at the Rate Update, this is our website, therateupdate.com. You can put in your application right through here. We're going to shop your rate to over 30 lenders. Now, here's how we do it. You put in your application, We're going to pull your credit, and now here's where the magic starts. I have 34 other lenders right now that we can work with. So here's how it works. I can offer you their programs, their rates, and I facilitate the whole transaction. So I'll be your loan officer through this entire process. How do you get involved? Well, just go to therateupdate.com. You can click the Apply Now button. You can schedule a consultation. That'll actually email me directly. So ask any questions you want. Give us a call. You go right to the front of the line. And you also, there's a lot of videos down here that a lot of people don't realize. If you haven't been on our website in a while, we're adding videos to this weekly. So if you're a homeowner and you're looking for me to track your interest rate to see, well, when that dip gets down to the lowest and then takes a turn, Dan, can you lock me in? Well, you got to get ready. So give me all your information. So check the RateWatch tool that we have here. But I got 3,000 videos plus on my YouTube channel. So check it out. These are the top 6 I picked for the opening. We have Home Buying 101, Disabled Veterans. If you're looking to buy or refinance, fantastic programs for you here. Understanding a little bit more about credit and FHA guidelines. Have they changed? Well, you get the most recent FHA guidelines right through here in this video. So thanks for watching, folks. I hope you found value in today's channel. If you did, please if I can ask you one thing, I'm trying to get to 50,000 subscribers by the end of the year, and only you can help me. So if you wouldn't mind just clicking down over there, the subscribe button, to help me get noticed by more and more people to help save them money if they're looking to buy or refinance. So thanks for watching, folks. I hope you learned something today. God bless. Have a fantastic afternoon, and I'll be back here to show you how the market ended on all this mess for today. So mortgage rates, they are looking better for today as well as the stock market. See you later. Bye-bye.